Let's get chatting about the primary market. It's been a fairly busy period for IPOs, and this one comes in again. We have Prateek Maheshwari, who's the co-founder and whole-time director at PhysicsWallah, as their 3,100 crore fresh issue and a little more than that in terms of secondary issue hits the street today. Thanks a lot for joining in, Prateek. It's an interesting space to be, because as Nigel and me as students would have definitely learned from a lot of the coaching centers, etc., that came by. Unfortunately, we had passed out of school before PhysicsWallah actually was of any use to us. But, when it comes to the investment space, there were so many companies in the education space. There was, I can think of, Treehouse, Zlearn, MT Educare, Everon, CareerPoint, and in the unlisted large space, there was Byju's as well. What makes you confident about sustained growth and path to profitability, especially when you're asking for 10 times sales? And it's a large, good macro opportunity that everyone speaks about, but history suggests very otherwise when it comes to the education space.
Thanks, Mangalam. Fundamentally, all these companies which you have mentioned, none of them have ever seen 4-digit CR revenues in their lifetime. We are a tech company, using mobile and website technology to provide access to Hindi heartlands and tier 3, tier 4 cities of country. See, fundamentally, what we have, what makes us a unique company is, one thing is our community building playbook. Currently we have 12 crore students, on 800 different social media channels with us, so that keeps our CAC near zero, to acquire these students on our mobile application. And second thing is, we are giving highest quality education at a very affordable price. So our average course fees is 4,000 rupees for entire year of live learning, doubt solving, mentorship, revision put together in just 4,000 rupees. For India's toughest examinations like JEE, NEET, UPSC, SSC, banking, CA foundation, commerce, everything put together. And if you see historically, we are the fastest company to reach 3,000 crores of top line, not just education, not just consumer internet. Any company who has been come to public markets, less than 5 years, we have reached 3,000 crores of top line. And very healthy bottom line as well. Our revenue have jumped 4 times in past 2 years. EBITDA is also jumped almost 4 times in past 2 years.
Okay, all right. Hi, Prateek. Good to have you on the show. So we take your points on board, and congratulations on on developing a business, a unique business. What the market has to say, that we'll know in the time to come. But you'll have definitely put together a very good and interesting business, which will help a lot of the youth of the country. So kudos to you all. Let's understand a couple of factors then. As you said, growth has been beautiful. Cost of acquisition is virtually zilch. But what about the path to profitability? Because market appreciates a good story and a good business, but ultimately shareholders will say, where's the profit? So is the path to profitability on?
Yeah, so path to profitability is not a challenge at all. It will come very soon. See, if you see our FY24 numbers, cash from operations were close to, more than 200 crores. In FY25, cash from operations were almost 2.5 times, more than 500 crores we have generated from core cash from the operations. If you see leverages in terms of people cost as a percentage of revenue, FY24 it was 60% of the total top line. FY25 it declined to 49%. And similarly, there are a lot of leverages in marketing cost, in tech as a percentage of total cost. As well as people as a percentage of total cost will come in future. See, we operate on a mega classrooms where thousands of students study together in an AI powered live learning environment. Every additional students brings additional EBITDA to us. So it's a very, very unique business model where 500 online teachers are teaching 50 lakh.
Right. We understand the uniqueness of the business model, and we understand that there would be leverages accruing from lower employee costs, lower technology costs, and higher student enrollment, etc. as well. Can you give us a sense on by when you will turn profitable, and how much more can your margins expand from current levels?
See, unfortunately, I cannot give you any definite forward guidance, but path to profitability, it's it's very near. See, in India, there are 30 crore students, and we are teaching only 1.5% of this market. So this is a huge, huge market, lying out there. And especially our price point and, the amazing technology stack which we have cracked, allows us to, to capture that market. 3 years before we have ventured into, offline, tech-enabled offline learning mode as well. We are the fastest growing offline chain in the country. We have opened 170 centers in past 2 years, which is three
Prateek,
times
and
more
that
than
is
our
reflective in your numbers as well. Your top line has compounded at over 100%. You are seeing some benefits of that coming into your operational performance. But what we also want to understand is you've moved from 28 stores in FY23 to about 300, offline places. This is also more EBITDA dilutive, also more ROCE dilutive, because you are opening these stores. Each of these, centers have a payback period of over 2 years. So what I'm trying to understand is, while business is growing, you will have to also keep on investing to cater to this under-penetrated market that you're talking about right now, right? So when you look at growth and when you look at your investments, put both of these things together, what could be a predictable growth rate? And I'm not asking you for specifics. You can give us a direction. What could be the predictable growth rate on the revenue and the EBITDA front be for you?
See, growth is not a challenge at all. As I mentioned, we are fastest Indian company to achieve 3,000 crores of top line in less than 5 years of the timeline. See, offline, you rightly mentioned, offline at a steady state is a 15 to 18% margin business. But I'm number 5th player in offline. My market share is less than 7%. So there's a huge, huge headroom to expand. It will be a compounding story for next 10 years. The stores, the 170 stores which we have opened recently will turn profitable. So the second year is the year when the offline stores turns profitable, and third year is when the offline stores start generating, at return of capital happens at third year, and if you see my market penetration, it's not even 7% as compared to my competition. So there's a huge headroom to expand in offline, which will give me enormous revenue growth. But at the same time, online, which is we have a market dominance. We are teaching 20 times more kids in online mode of learning than our competition. And that makes us a very unique company. My offline learning centers are linked to online. 80% of my offline admissions happens through online. So that keeps our CAG very low in offline mode of learning as well. While any center, when we decide to open, we look at our internal data. If we have a critical number of student in online learning in any pin code, we just open a center there, sends a notification to the students and bring them into offline event, and our centers get filled. So it is a very unique business model. We are riding the wave of internet and and delivering great outcomes for the students as well.
Correct. All right, Prateek, I'll tell you what. Today you have joined in. You have educated us about your business and given us some insights. And as you repeatedly said, it's a unique tech business. Next time around, we're inviting you. We're looking forward to hearing more about the numbers, the path to profitability, how much more money would you require, in the time to come to grow the business, and also the high attrition rate. We'll talk about a few of these factors. For the time being, all the best to the IPO. On listing, re-inviting you to come back on the channel. And in fact, we'll quiz you a little bit more on some of those numbers.